God bless everybody. We thank you for coming in on tonight. We got um everybody coming on in. Hi Terry. We got my brother Tony. Hi Tony. Thank you for coming.
Hey,
We know it's ladies' night, but we welcome anybody who need to get information, honey. God bless y'all.
I ain't
Okay.
been able to put my dress on. That's all.
Okay. I'm waiting for Andrea and Shayla. And we're gonna go ahead and get started because we got a few things to go through, and I'm glad y'all could make it on tonight because we want to really talk about and give y'all the 5 divisions of your business. Start the structure of the business, dealing with the bank accounts, and we want everybody to get that. And I learned that in what you're going to see on tonight for your business structure for your handling your business, you may get some ideas on how to handle your at-home things as well, your at-home structure as well. Okay, so we're going to go ahead on and get started. I'm waiting for Sister Shayla. I know y'all can't see the back room, but I'm going to keep my things small for started so I can see when she comes in. So we're talking about the 5 divisions of business. So after you establish your entity, like your LLC, your corporation, your S corp, or whatever that you have as your business entity, what you want to do is open up 5 business bank accounts. Okay, you want to research the bank fees, the small local banks, the bigger banks in your area, to find out what would be best for your company. Because they have those fees when you have the savings accounts or the checkings account and things like that. You don't want to mix your personal accounts with your business transaction cards and or anything like that. You want to keep your personal, and your business. You want to set up accounts away from your personal account so you won't be tempted and you won't stray and you won't do something that's wrong, mix something up. Okay, and then we want to have all of your documents ready for your bank account, your LLC paper, your bank resolution, if they need that, and all the stuff they need for opening your account. Then you want to label. We're gonna be talking about that, labeling your accounts. And how you label your accounts is you can, if they don't do it for you at the bank, then you could do it on your app for your bank and go to the nickname and name your account. Okay, let's get started. So I'm glad everybody is here. I hope you get something out of it today. And I hope we have been getting started on our business with the first steps. Last week Shayla showed us how to go online and fill out the form for your LLC. So, and she said it was just $50 here in Georgia. I don't know if it's just $50 in the other states. $75 it was once when I did it in Virginia. Okay, so now your first bank account that you're going to be opening up is the, hold on, somebody is down here at the bottom and I got to get to the bottom to let you back on. Oh, that's Tony. Okay.
Yeah, it kicked me out.
Okay. All right. So your first bank account is going to be called the operating account. This is the business checking account that you're going to be having all your money coming into the account. You want to label that account operating account. So when you have your money coming into this account, all your income you're making for your business coming into this account, not going into your personal account, but into your operating account. You're going to be operating from this account. You're going to be pushing your money out to go into other accounts, pushing your money out to pay your business, whatever you're paying for, like going to Staples or getting your gas or whatever it is that you're doing. You're working from this account. Okay, so you're going to call it your operating account. of course, you're going to label it operating account. And then your transfer, we're going to talk about this. You're going to be transferring a percentage, whatever percentage you choose that you need to choose for your business and how you operate in your business. You're going to take a percentage out, and you're going to put those percentages in all the other 4 accounts. And we're going to get to that in a few minutes. All of your money, again, is coming into this one account, and then you're operating from there and shooting your money out into other accounts. Okay. All right. Let's go to the bank account number 2. Bank account number 2 is your reserves. This is called your reserves account. Can everybody see the page good?
Yeah, I'm good.
Okay.
Yeah,
Okay.
I can see it.
Now, this is your reserves account. You do not touch your reserves account. Your reserves account is there for like your crisis, your emergencies, your huge items of things you need for your business that, you know, would come from your reserve. So this is something you really don't touch. For instance, like when the pandemic came in, if people would have had their reserves, most of the businesses probably would not have closed because they would have their reserves stocked up and ready for emergency, ready for the crisis that was coming, that has came, which was the pandemic. Okay, so you don't want to touch your reserves account. You can use a savings account or a checking account for your reserves. And label it reserve, so you know this is what the account you're not touching. And again, we're going to be transferring a percentage that you named, the percentage from the operating account to the reserve account. Okay, so that's how you're going to build your reserve account. It's shooting from your operating account a percentage at the end of each month. Okay, coming from your profit. We're ready to talk about that in a few seconds. Yeah, at the end of each month, we're going to do a profit loss, meaning how much money came in minus how much money went out equals your profit. Okay. And so from your profit, that's where you come in and pulling out your percentage to put in all the other accounts. Okay. And please beware of the savings account fees and limitations in your research for your banks. Okay. Okay. Anybody have any questions? Not yet.
Nope.
Continuation with bank number 2. Let's say this is the example again. You made $10,000 this month. You spent in expenses and stuff $5,000, which leaves you $5,000 profit. So let's say we're going to choose 10% is our percentage we're taking out at the end of each month. So at the end of this month, I found out I had $5,000 in profit. So I'm going to take 10%, which is 500. And I'm going to put 500 in my reserves account. I'm going to put 500 in my bank account number 3. I'm going to put 500 in my bank account number 4. I'm going to put my 500 in my bank account number 5. Okay, everybody see how that works? Okay, and again, we're on the reserves. Don't touch your reserves unless it's for your emergency, something emergency, a crisis. Okay, and your third bank account is going to be your tax account. Okay, now you know you want to put that 10% in your tax account, because at the end of the year, if you owe taxes and you don't have no money saved up to catch you at the end, then you're gonna mess yourself up with your business. So what we want to do is put that 10%, which is 500 at the end of the month that you calculated, into your tax account and label your tax account. Okay. So that you will have it there and you won't fall short later. And then we have our account number 4 is our marketing account. We all know that we need marketing. We need to have a way where we are causing our business to grow. So we want to make sure that we are pushing that percentage that you chose into your marketing account as well. Because at the time when you need to hire somebody to take care of if you got the social media, you have money in your marketing account to pay the social media, to take care of your social media ads and things like that. Also label your account marketing account.
Oh boy.
Now, this account is you get a tax write-off with this account. So we want to make sure that we are spending the money. Hold on, I'm going too fast. Spending the money on, on what you need for your business to market it, to get it to grow, because it is a tax write-off for that. And the last bank account is bank account number 5. It's innovation. An innovation account, it could be a checking account or your savings account. You want to label it again, innovation. You might want to launch innovation for if you might want to launch a new product or a new service. Okay, so you want to make sure you have that money there, so when you're ready to launch your product or your service, you can, or if you need to go to school and learn about a specific thing dealing with your company, that's an innovation. You have money there to be able to go to school, send yourself to school, and learn what you need to learn about your business, for your business, to grow your business, to keep your business running. So this is very important to have as well. It's a asset to you. Because this innovation, you is when you look for ways to change the future of the business. You are doing forward thinking. You're doing research on your product or on your service. And is important. This is an important part to scale your business up. And very important, you spend this money. Now, this money you make sure you spend by December 31st, because you want to be able to get you don't want to have to pay taxes on this money. Okay. And now again, we just to summarize, we want to from our profits at the end of each month, we want to make sure that we are putting a certain percentage into each 4 accounts, okay, to be there for what you needed to be there for. Okay. Like the early example, we made $10,000. We spent $10,000. We got a profit of we spent $5,000 at a profit of $5,000, and so then that gives us our percentage we chose was 10, so we put 500 in each account at the end of this particular month. Okay, and now this is a must do. All business transactions, you make sure you put in all business transactions into your business account. If you need to get money out for you personally, then if you have the LLC, be sure to just transfer that money from your business account to your personal account. But if you have an S corp, then you have to give yourself a paycheck, and then take your paycheck and spend it on your personal. So your LLC, if you have money and you need money personally, don't just take your card from your business and go spend on the personal. No, send it from your LLC bank account, that the operating account, and send it to you to your personal account, and then take it from there and spend it on personal. Okay.
Are you saying transfer it to your personal account first before spending?
That's right, because you get ready to spend it on personal personal things, and you don't want personal things on your business account. Things get mixed up when it's tax time. Things get mixed up when you got to read your books and find out what's going on. What's this? It's too much mixtures up in there that cause confusion, and then you find out you did something wrong, and then you cause yourself more fees and stuff during tax time or when you get audited or something like that. So that's why this is the way you keep it separate. You send it over to your personal,
Right.
because the LLC, you don't have to be on a payroll like that. But the S corp, you have to be on the payroll. So pay yourself a paycheck, and then take your paycheck and spend it on that personal you was trying to get it for.
All right, now I got one more question. Can you go back to what you were talking about the accounting and taxes and stuff like that?
Say it again.
Can you go back to that other screen you was on before this one, the taxes?
Okay. Okay.
Okay, so you said.
I can't hear you.
I know, because I was reading what I was looking at. What did you say about the tax? I had a question about something you said about the taxes.
About the taxes?
Uh-huh.
About the
I know
taxes.
what it was. You had said before, I can't remember what you said. I thought you just said just then, but I couldn't catch it all. But you had said something about our taxes, and by the end of the year, about a specific account to make sure we spend by the end of the year. Which account was that?
The innovation.
The innovation. Now, does that rule apply if you pay quarterly taxes? Do that rule by the end of the year still apply?
You spending, yeah, because what you're doing is paying on the amount that's left in there. Then you're going to be on, because it's a profit, and you sent the profit to your innovation account. And you're going to be on money on that profit. But if you spend it on innovation, then it's spent on your business. It's spent on your business. So therefore, you won't owe the taxes on that because of how it was used. I'm gonna have to search more into that too.
Okay.
Right.
That was all I wanted to know. I wanted to know that rule still apply if you're paying quarterly taxes.
Right. It's good that you if you do the quarterly payment of your taxes, but this is talking about you won't owe taxes on it by the end of the year if you spend it by the 31st.
So during the year though, when I'm paying quarterly, I'm paying taxes on what I have in there.
Right.
Okay.
Right. So, I would have to dive deeper into that to find out more and how exactly it works. Okay. Okay. Terry, did you have any questions? I know I went look through here a little faster.
No, I got the understanding of it.
Right. Okay.
Oh.
You said, yeah, I do. You can set your percentage to what you want, or just 10% is what's normally.
10% is like the minimum, the minimum, but you can set it to what you want. It's based 5%. It's based on 10%. It should be your minimum probably, but you can set it to 5% if that's because it's based on what's going on, what you're doing with your profit at the end. You know what I'm saying? What it's covering and everything.
Okay.
Because you want to make sure you got enough in there growing to be able to do what you needed to do, like the marketing, and like the innovation, So that's why 10% probably would be a minimum set amount, But if you can't afford to do 10% at the time, hey, start off with your 5% because a little bit as it grows, and then as you grow in your business, then you raise you give it an increase
percentage. Yeah.
with your percentage. Right.
All right.
Right. Okay. So, what do y'all think about what do y'all think about these 5 divisions? What comes to your mind as I went over it, as I went through it?
Oh,
Well,
this how the white people get their money. That's what came to my mind.
This how they set their money up.
This how the white people get their money, and we ain't
Not
getting none.
not get it, but set it up.
Make
Set
it,
their money.
yeah,
How
and
they
be
set
able to
their
make their business grow.
right. So because the operating account is the money that when you whatever business you have, your roofing job. Once you do when you get a client and get your roofing money paid for that roof, then you take that money and put it in your operating account. And then from your operating account, that's when you disperse the money. You pay for what needs to be paid for. You do all your expenses, your overhead, you know what I'm saying? Re-upping your supplies, whatever you operating, you're using this credit card or this not credit card, this bank card
Account.
to make payments on this account to make payments on your business. All money coming in, all income coming in, all your roofing jobs, all your handyman jobs, all your auto, if it's under one business name, and then it's going into your operating account, and then you pay your Staples to get your whatever you needed from Staples, Yeah.
Right.
You just at the end of the month, you go and calculate. You find out how much money came into the account, how much income came in, how much money did I make, and then you subtract how much money you spent out of that account. And then what's left is, of course, your profit. Then from your profit, you take your percentage that you chose and disperse that percentage amount to all the other accounts, the tax account, the innovation account, the marketing account, and what I leave out, and the reserves account. And then you're growing, you're saving yourself, you're helping yourself, you're running your business, financially.
Now, when you say all the money, when you say you spent 5,000, what is that being spent on? Like the bills?
The business bills, the
Okay.
business needs, paying for your let's say we in the building, you're paying for your building rent, you're paying for your lights, you're paying for your water, you're paying for your products that you had to buy more products to put on the shelf. You know what I'm saying? It's all your expenses for the business. Mm-hmm. Yeah. Yeah. And did everybody understand the operating account? Everybody understand the reserves account? Reserves account, you want to reserve that and hold it for crisis, like the pandemic. You want to hold it for what else? Emergencies and very huge, large ticketed items. You know what I mean? let's say that you want to buy some land for your business. You could. Well, I don't know if you can, but you should. But it can be for large ticketed items like that.
So this concept
Reserves.
is set up
Huh?
for this concept is set up for a profiting, successful business.
No, you start off like this. You start off running your bit. Well, I say that. I haven't heard nobody say how much money you have to be to start your business like this, But my thoughts, it don't always work. But my thoughts is to start. If you start small, right, then you'll be right as you go. You know what I mean?
Well, true. I agree with you, but what if sometimes we
Sometimes
don't get outside the operating part?
say it again.
So what happens when we don't get past the operating part? In the beginning, we might not get past the operating part, meaning the money. The money might not get past the operating account. Might not have 10% to put in the reserve account, or 10% to put in this account or the other account.
You might not have money to put into the operating account. That's what you're saying.
Yes, in the
So
beginning.
your money. So you're saying your money. You saying you're not making money in your business, because right now I'm not making money in the business that I set up as a S corp. So I don't have money to put in my operating account. However, I did open up my operating account and put $100 in there, which that takes us to our capital, where it says that, let me see if I can find it. Business person, let's see, transfer. Okay, the capital is your personal money as capital should be labeled as equity or loan. So if you when I put my $100 in there, I put it in there as equity, so I don't get it back. Equity means the business does not owe you the money back.
Okay.
Okay, so you putting your money in there as equity to grow your business, but whatever comes in, treat it with the 5 divisions.
Okay.
And if you put your money in as a loan, I guess you have to label that you're putting it in as a loan. So when you see it on the books and you get audited, you see it on the books that's a loan. And then you have a specific time that you paying, you want your business to pay your loan back. Right. Okay. So of course you're gonna want that after your business make money, you know. But other than that, you know, start off right, you know, and you just had to put the capital into your business as a loan or as equity to make the money to help to get your money off the ground. You know what I'm saying? But they always say you don't make nothing in the first 5 years or something like that because it's money instead of going in. And probably because you got to grow it. The marketing, you got to get that marketing off the ground and get people coming in, whatever it takes to, you know, get your customers, not whatever it takes. You know what I'm saying? Legally. Anything else? Any other questions? Any other thoughts? Any other experiences anybody have? So let me tell y'all what I did so far. Like I was saying, I opened up another business account because I wasn't sure about the business account online that I did, and I had to get through to them in order to find out, is my account a real business account? Because if they have it under my social security number, it's not a business account. It has to be under my EIN number to be a business account. So I went to my other bank and I opened up my my business checking account and savings account, and I saved it. I named it operating account, and I put my money in it, and then I named the savings account. I believe I went on and put reserves. I put it as reserves. So now I gotta go and find me a different bank somewhere else, not all of them all in one place. So I won't be easy to just do stupid stuff or something. So I want to be able to get another account to get my innovation, my marketing, and my innovation and marketing and something else. What is the other one? Account, everything set up. So then we'd be on the road of trying to work it the right way. But what I found, I said, if we set up our business accounts like this, what in the world can we do with our personal accounts, with our personal home stuff? If we set it up as a business in our home, it'll help us run smoother with our life. So what I did with my personal, I took my Chime and made Chime my I made Chime my my dog foods and supplies and dog supplies, gas money money come from it's coming from my, I ain't calling my operating because I don't want to get it mixed up with my my business. So I just keep it there as my personal checking and trying to see how can I make all my money come into there and then disperse a certain amount out to my chime so that I could take care of my when I want to do go out to the restaurant, buy dog stuff, decorate the house and stuff like that. Then the other bank is for to pay my bills, like my car note, my car insurance, my health insurance, my phone bill, my whatever, and my rent or whatever, however I set it up. You see what I'm saying? So by doing this, it makes me think that I can make sure I do my house life, home life in a structured manner. Y'all get that? Do that make sense? Ooh. Have I lost y'all? Y'all on mute. Okay.
I was trying to say it can be done because I do my personal like that because I think we have like 4 banks.
Okay.
And each one serve a certain kind of purpose.
Yeah.
Uh-huh.
Yep. That's right. That's how you do it. And I'm thinking about when I did a message one time about Mordecai and them, and for some reason or other, I was able to start off talking about the real estate, and in the real estate it says you have a fiduciary responsibility, and it was saying that you cannot mix your personal with the business of the real estate. So they was very adamant about that. You cannot mix your personal with the real estate money because it's just going to mess everything up. So we have a fiduciary responsibility in our homes, and we have that fiduciary responsibility with our business. So we step into it, we get into it, we getting where we need to be. How many of us started our business legally, got our LLCs, or starting to look for it, or it's no more than 100. If it's not 50, it's 100. If it's not 100, it's 50 or 75 in Virginia. Okay, so we just started. Just go and get the first part of it, which is the LLC or the EIN, and then the LLC, whatever it is, and let's get started. We already started. Some of us already started with our products, like Terry, Andre. You started planning your product.
Oh yeah.
So let's get started with servicing, or moving it. So me as well. I gotta get started with moving my product or service. Okay. And thank y'all for coming on tonight. If you don't have any more questions or experiences you'd like to share, then we're gonna move on and greet y'all and see y'all on the next time. Are y'all anything anybody have they'd like to say?
No, not in this.
I'm good.
Okay. All right. God bless y'all. Thank y'all for coming. I hope this was good for you, good to you. And thank you for coming so we can share this. Thanks. See y'all later.
All right, bye.
Bye-bye.